Shares of Bharti Hexacom rally over 6% after brokerage firm JP Morgan initiates coverage on the stock, an overweight rating and a target price of 1280 rupees a piece.
Hudson Agro surges in trade on the back of a strong showing in the Q1 numbers, which rise close to 10% on a year-on-year basis. The summer season has also aided the company's ice cream business.
Shares of Voda Idea rally after the Supreme Court agrees to consider the company's plea for an urgent listing of its curative petition in the AGR case. The move is expected to benefit Bharti Airtel as well.
Bandhan Bank, Piramal Enterprises, Balrampur Chini and IEX, all of them climb more than 1% in today's trading session as they come out of the F&O ban.
Oil India comes under pressure after the government of India raises the windfall tax on crude oil to 7,000 rupees per metric ton. The stock is down more than 2%.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always is Mangalam Malu. And in the first hour itself, the Nifty has hit a half a century. Can we build on from here? Can we end with better gains from here? I'll tell you what, the second half of trade belongs to the financials and the banking names because we have weekly expiry playing out on both those two indices. I think, Mangalam, what's positive today is there are way more winners than losers. The current advance decline ratio is 2:1.
Twice the number of stocks. Yes, that's doing extremely well. And we're also seeing some traction in a couple of these Tata Group names actually as we speak. So Tata Motors has moved to the high point of trade. Tata Steel has done well. And we have Tata Consumer as well, which now is among the top gainers that we have today in the last hour or so. Tata Consumer should come up for you. It's a big up move that we're seeing on that stock. We have important results as well, over the next couple of days. Asian Paints, tomorrow is a market trading holiday, but Asian Paints comes out with its numbers, and then day after, we do have the numbers coming in from Infosys. So to that extent, all these stocks will be in focus. Though I'm watching out for a couple of these pharmaceutical names. Since yesterday, they have been buzzing around as well. So case in point, something like an Alembic Pharma, Strides Pharma, both of them are the top owners when it comes to the F&O stocks. So just keep an eye out on that. India Cements too continues to buzz now at around 320 for that stock as well. But let's get you some ideas of profit coming in from our colleagues at Money Control Pro. We have with us today Lekha Bhatlani Chamnani.
So our stock pick is this PSU giant Coal India, as we think the secular growth trend is in place as India's power consumption has been rising, driven by increased demand from the industrial segment. The company's total production in Q1 FY25 increased by 8% YOY, with 16% growth seen in the supplies to the non-power segment. Now, given the demand trend and government's plan to reduce coal imports, Coal India, which caters to 80% of the India's coal requirement, plans to fully meet the domestic demand. Now, in order to achieve that, it recently announced changes to its e-auction norms. Among the many initiatives to ease the entire process, the company plans to lower the earnest money deposit and also increase the quantities offered under the e-auction hammer. Now, we think the easing of the e-auction norms will be favorable for Coal India's customer more than the company itself. However, bringing in more volumes through the e-auction route should help cater to the unserved domestic demand and increase volumes starting Q2 FY25. While the e-auction volumes account for only 10% of the Coal India's total volume, this segment is important as the realization is significantly higher than the FSA segment. Now, we think the e-auction premium over FSA is likely to remain supported at the current levels or could see a moderate upside, supported by surging demand from the non-power sector and sturdy global benchmark prices. Now, trading at 4.7 times FY26 estimated EV/EBITDA and a dividend yield of 5 to 6%, we think the stock is well placed to see more upside.
Well, thanks a lot for that, Lekha. We'll keep an eye out on that one. Well, let's welcome Shilpa Rao to Prabhudas Leela for a technical check on the markets. Hi, Shilpa. Good morning and always good to see you in. Well, markets holding well with a gain of closer around 60 points odd. Tell us, what are the levels you're looking at? It seems that 25,000 mark is well and truly on.
Good morning, Nigel and Mangalam, and thank you for having me on the show. Yes, Nifty and Bank Nifty, both the indices are actually holding on very well, and Nifty attempting a breakout towards 24,850 to 25,000 zones is very likely to happen. Now, the support base, one can elevate towards 24,400 and stay long and look for targets till 25,000. Likewise, Bank Nifty also sustaining 52,500 to 600 zones, acting as a mild resistance. Once it breaches that and sustains, you will see 53,500 levels coming very soon.
Okay, all right. What about individual stocks, Shilpa? What are you looking at?
I have have two buys. The first one would be from realty sector. I like Oberoi Realty a lot. Oberoi Realty is witnessing some sort of breakout here, and if it sustains the 1700 mark, then you will see a very sharp move moving towards 1900 positional. Intraday also you can expect 1780 to 1800 zones. The same has been recommended also at Prabhudas Leeladhar today. The other one would be a buy in Kolpal, again recommended same at PL. You are seeing that there is again some sort of breakout above 3100 zones, and as long as it is holding these levels, Kolpal can do 3250 to 3300 positional, and on a very short term basis intraday also you can expect 3180 to 3200 zones coming in.
Do you have a view on Chennai Petro, Shilpa?
Just a second, I'll just check.
No problem. It's been a big mover. So Chennai Petro is up around 23% this month, 15% up this week itself. And if you look at the last 12 months or so, it's an up move of nearly 173%. So it's seen a big move. Let's see whether that sustains from here on or not. What could be the reasons for the same from a chart standpoint? Shilpa.
Yes, Mangalam, if you see for the weekly breakout also, it has given about 1060. It is sustaining that. And now at 1200 zones, I wouldn't suggest to go long on immediate basis. But yes, on declines with a stop loss of 1060, definitely it's a good buy. For positional targets, again, above 1408.
All right. Thank you so much for joining in and giving us your views on individual stocks and the indices, Shilpa. With that, let's take a short break. Come back on the other side. We'll have with us the management of Antony Waste Handling, one of the big stock movers in yesterday's trading session on account of their first quarter update. The management, Mahindra Ananthula, joins in to discuss more. Welcome back. The telecom stocks have been on our radar ever since last evening, where there was news coming in. The Minister Jyotiraditya Scindia will be meeting the telecom service providers and industry stakeholders shortly. Ashmit joins in to tell us what could be on the agenda. Ashmit.
Well, the Stakeholder Advisory Committee, we understand the meeting is about to begin shortly. This is an effort, an outreach by the new Minister Jyotiraditya Scindia to reach out to the industry stakeholders to learn more about the industry's concerns and also share some of the pressing issues that the government has on its mind. Now, firstly, let's begin with who is likely to attend the meeting. Let's bear in mind that the invitations as a member of the Stakeholder Advisory Committee have been sent out to some of the biggest hitters in the industry. So whether we're talking about Sunil Bharti Mittal, Kumar Mangalam Birla, Akash Ambani, N. Chandrasekaran from the Tata Group, the invitations have been sent to them. The invitations have also been sent to Bharti Airtel, MD Gopal Vittal, as well as to Akshay Mundra from Vodafone Idea. So essentially, we're expecting the top leadership, the top deck of these telecom companies to join. This would be the first meeting here done by the Minister Jyotiraditya Scindia. Now, some of the aspects to bear in mind. One of the key concerns that are expected to crop up is the network quality. That is one concern that the government has. Unsolicited commercial communication is another key concern that the government has on its mind. As far as the industry is concerned, they will be speaking about issues such as the 5G network, the way the rollout has panned out, looking ahead at potential 6G collaboration. And also bear in mind, this would be the first such meeting coming in after we saw the tariff hikes being undertaken by all the companies in question. So a whole host of issues that are likely to be taken up, but this will again, being the first meeting of its kind between the minister as well as the telcos, it will be more of sharing the initial ideas and setting the tone for future conversations.
All right, Ashwin, thanks a lot for that. Those telecom stocks in focus today on various news pieces, also on account of some brokerage coverage coming in for Hexacom as well, up around 6.5% for that stock. But let's talk about another stock which was a buzz in yesterday's trading session. That was Antony Waste Handling, after the company came out with its first quarter business update. Mahindra Ananthula, who's the Group President of Operations and Business Development for the company, joins us now to discuss the company's outlook going ahead as well. Thanks a lot, Mr. Ananthula, for joining in. The core revenue for the first quarter was up 11%. It was driven by escalations in tipping fees, revenues from fixed ships, also steady contributions coming in from the new collection and transportation project in Panvel, along with sale of power and waste to energy project itself. So this was the first in the series of steps that you had taken. What one wants to understand is how much higher can it be from here on when it comes to the utilization of your plants, further scaling up. So this first quarter revenue growth of 11%, how much higher can this be for the entire year?
Good morning to you and all your viewers. Thank you very much for the kind words. Yes, we are extremely bullish about the way some of the last 2 quarters have fared for us. And specifically talking about the waste-to-energy project, in the second quarter of the first year itself, we have successfully managed to stabilize the plant operations. And that reflects in the very high PLF of 89% in the second quarter. I mean, we expect that in the first year of operations, we can achieve a PLF of close to 80% on an annualized basis, and which is by no means a small feat, considering all power plants typically work at around 65-70% in the first year. So we are extremely pleased by that. And going forward, I mean, not only this plant, we are also looking at some of the new ventures, which will give us a very healthy growth going forward.
All right. Hi, Mr. Mahindra. Good morning and good to see you in. So you're saying that the PLF numbers are encouraging, which is good to hear. Now, could you tell us about this 25% growth rate guidance that you'd given? Given the start you've had to the year, do you stick to the revenue growth of close to around 25%? And could you outpace that? Or do you believe that there's an upside risk to the 25% guidance number?
I mean, just looking at the order book that we have, which is around 8,300 crores, we are very positive that we can clock a CAGR revenue growth of close to 20 to 25% over the next 5 years. So we stick, by and large, we stick to the guidance which we have been giving since last few quarters.
All right. Just to understand, the industry size is around 4,500 crores?
I mean, it depends. I mean, you know, when you talk of industry, I mean, if you're looking at the processing industry, I mean, that's you can say probably close to 4,500 or 5,000 crores. But then the business, the addressable market for us is the business of collection and transportation, processing. We're also talking of alternative fuels, recycling, and so on. So the large market size is extremely large for our business.
So your target market is how big, sir?
I mean, difficult to put a number because especially the collection transportation is a very unorganized market and more regional. But among the organized players, I mean, I would say that we are in the top 2.
What is the kind of volume that you are targeting to handle this year? I mean, the first quarter, if you look at your total municipal solid waste, the handle numbers were close to 1.2 million tons. On a quarterly basis, what is this number likely to be? And do you get paid per ton, or is it just a long format contract that you have irrespective of the tonnage here?
So, yes, I mean, it's by and large, the collection and transportation contracts are tonnage based. So we are paid on tons collected and transported. That's on the collection and transportation segment.
Okay. Oops.
Right, we just try and repatch that connection with him. So on the CNT business, the revenue billing is done on a tonnage basis, though an order book of 8,300 crores could keep the company afloat for 20 to 25% revenue CAGR over the next 4 to 5 years. 80% PLF is what they're targeting in the waste-to-energy power plant this time around as well in the entire year. So we'll keep an eye out on how this pans out, because it's an interesting business. You know, time and again, we do ask the management whether they have any impact of change in political scenario to their business itself or not. They say, no, these contracts are very long-term and there haven't been much changes. It'll be very interesting where the growth comes by, largely because of the big move that we've seen in the stock over the last 1 year or so. It's nearly doubled.
Well, I think, you know, what the street is excited about, Mangalam, is it's one of the only listed players in this space. They've been there for, I think, more than 2 decades odd. And now that an investment phase is over, the street is eyeing the growth phase. So I wanted the management's comment on that as well. For the time being, they've given us that number of a CAGR of 20-25% over the next 5 years or so. It appears that they're well placed. Yep,
I guess we have him back with us. Mr. Ananthula, you were talking about the tonnage outlook going ahead.
Yeah, that's right. So I was talking about the waste-to-energy project where we have 2 revenue streams. So we are paid a processing fee per ton of the waste that we get in our campus. And the second is the sale of revenue. So the processing plant like waste-to-energy has 2 revenue streams. The collection and transportation contracts are paid on per ton basis, by and large. 90% of the contracts in India are structured on those lines.
And what is the per ton sort of realization that you make? What is it likely to be? And what is the kind of tonnage that you are likely to handle going forward?
So, I mean, we don't give specific numbers on each project, but specifically talking about the waste to energy project, we get about 1,000 tons of waste, which is guaranteed as per the concession agreement, and we are going to process about 700 tons in our waste to energy plant.
Okay, all right. Mr. Mahindra, also, wanted to understand what about the margin outlook? You've been doing margins in the vicinity of around 20% for the past year. So, top line growth of 25% we have. What can the margin number look like?
So both for EBITDA as well as the PAT margin, I mean, our guidance stays. I mean, we expect to maintain our EBITDA margin of 22-23 odd percent, and PAT of about 10%.
Okay, all right. And any quick update that you can give us with regard to the new venture you were looking at, the vehicle scrappage business? I think last time you said you're looking at a capex of around 15 crores, but it's in initial phases. Tell us more.
That's right. So we have made progress since then. One key change that we did is that earlier we were planning to take private land on long-term lease, but then after looking at the risks involved in leasing land, we realized that we are going to take land in industrial area so that we have more longevity and sustainability of the project. So that's one change. We have already identified 3 land parcels for the project, which is going to be a recycling park, in which we will have the vehicle scrapping facility as well as tire recycling in the same project, the same project area.
Vehicle recycling and tire recycling. Just before we let you go, what would the RDF revenue for the entire year look like for this year?
So again, I mean, we don't give specific revenue for various products that we have. But just to give you an idea, I mean, in terms of tonnage, this year we clocked close to 35,000 tons, which is almost 33% higher than the corresponding quarter of the previous year. Last year we sold about 130,000 tons of RDF. This year we're likely to sell about 2 lakh tons.
All right.
Thank you. And contribution in all those are continuously increasing.
All right, thank you so much for joining in. Wish to have a word with you after you've reported your numbers as well, so that we can get into the nitty-gritties of what you've reported and what you're likely to do going forward. But 20-25% revenue CAGR with margins around that 22-24% is something that the street likes. There has been a smidge of an uptick in the stock after an up move that we saw yesterday post your first quarter update as well. And that's the management of Antony Waste Handling. But with that, we'll slip into a short break. But as we do that, here's a quick programming note. Coming up tomorrow is the market holiday at 9 a.m. is a very, very special offering. A big CNBC-TV18 exclusive just ahead of the budget. One of the world's top market strategists is visiting us in our studios. Chris Wood of Jefferies will make his bull case for India. And also, don't miss out on this exclusive chat between Chris Wood and D Street stalwarts Ramesh Damani and Utpal Chet. All of this on Wednesday, that's tomorrow at 9 a.m. only on CNBC-TV18. Welcome back. Let's talk about the big news that came in overnight. It was CNBC-TV18 exclusive, which was later confirmed. Vedanta has indeed gone ahead and launched its $800 million QIP. Nigel has moved across to the wall to tell us how the proceeds are likely to be used and how is this likely to aid the company's growth plans. Nigel.
Well, that's right. Vedanta has launched its $800 million QIP, which includes a base issue of around $600 million and around $200 million, which is a green shoe option. The timing is perfect because the globe is bracing for rate cuts, which will result in a softer dollar and serve as a booster shot for base metals. So Vedanta is very, very well placed. Well, Vedanta can use these funds for its ambitious growth capex of around $3.5 billion, which has been lined up over the next 2 years or so. It can also look at retiring high-cost debt and ultimately make a bit of a pitch for a change in its ratings. Let's see whether that happens, but that will happen with a bit of a lag. Now, the QIP entails a dilution of approximately 3 to around 4% of its total equity share capital. And so the promoter holding will get diluted a little bit from around that 59.3%, which was last reported in June 2024. But there will be a lock-in of close to around 60 days for the promoter entity. Now, the promoter, Vedanta Resources, well, is in far better shape as it reduces net debt at a standalone level, and it's well placed to fulfill the $1 billion obligation for this fiscal, which is FY25. How do they do that? via brand fee payments from Vedanta Limited as well as Hindustan Zinc, both those two listed entities. They've done that promoter stake sale as well, which will help them. And also dividend payouts. Some part has come in and the street anticipates there'll be another dividend payout for the remainder of this year. Now, brokerage firm Phillip Capital, well, they have given a target price of 552 rupees per share. And the table that comes up on your screen, well, that indicates that the stake they have in Hindustan Zinc as well as the aluminium business, well, that accounts for bulk of this SOTP of around that 552 rupees or thereabouts. While also, if you look at the negative value, well, the net debt number of around, that gives you a negative value of around 173 rupees. So there is potential upside risk to these estimates. That's because of two counts. One is on the net debt that's assumed. The street believes that maybe it can be lower than estimated because of this fundraise and also hefty cash flows that are due. While the aluminium EBITDA, well, that could be a little bit higher as they're looking at higher captive sourcing of alumina as well as coal and bauxite. That's what could lower the aluminium cost of production by around $250 on a structural basis. Well, the steel street expects the demerger to be completed by the end of FY25, which could unlock further value for minority shareholders. Well, before we wind up, let's highlight some risk. And I'm putting out three out there which could potentially derail this bullish outlook. One is the higher debt at the listed entity to service the promoter debt. The second factor is any kind of delay in commissioning of the backward integration for the aluminium operations. And the third could be investing in the cash that's generated into low return assets or unrelated sectors for Vedanta. Well, the ingredients are in place. The question is, will they finally deliver for shareholders? Nonetheless, this QIP is a bit of a booster shot for the stock.
Take that point, Nigel. Thank you so much for putting that into perspective, what the money could do for the company and what the company itself could do for shareholders going forward. That's Vedanta, up around 0.5% right now. With that, we're out of time on this edition of Chartbusters. Thank you for watching. Trading Hour comes up next.